Treasury yields continue to decline as we've been through a pretty busy week here after the Federal Reserve meeting, after the market repriced lower chances for hikes in 2019 and beyond, after we've gotten this political chaos, whether it's going to be a shutdown, whether it's going to be a shifting of personnel inside the president's close circles. And I think that right now we're seeing this flight to quality bid sort of extend into the holidays. We have the holiday here in the U.S. and then the New Year coming the week after. So there's a lot of sort of variables involved in this move. Obviously, it started way before, but it's now starting to really pick up some steam. And if you look at where 10-year yields were at the beginning of the month, up at 3%, and now we're down south of 280, it's a pretty significant move. And the fact that we've been able to hold it. We didn't see a quick bounce. So right now, we got our first weekly settle below 280, really going back to April. So this is new territory, at least on a weekly basis for treasuries, and not likely to pull back at least until after the new year, until there's some new news coming to the table. Maybe the shutdown resolution could push yields slightly higher, but I don't see us moving too far away from 280 until at least we get some new numbers, we get some new clarification, some new resolution. And likewise, there are plenty of problems coming in 2019, starting with Brexit, but that's another story, and that's a little bit further down the line than where we're looking today. Obviously, with the big move in treasuries, the first settle below 280 in several months, volatility is higher. It's high as it's been on this move. So I think right now we're starting to see the pulse of the market is giving you an idea that while this was maybe a fear of trading outside the range, maybe there's something else underneath the surface. So right now, volatility bidding higher, yields heading lower. It goes hand in hand. And lastly, leverage funds. Well, they've been net short throughout this move from 280 up to 3.25 and now back to 280. And now we're starting to see them add to those shorts. And some people look at that and say, well, the trend is lower yields. We're seeing vols bid and the risk off trade. Well, I think the line in the sand here is going to be 275 yield. And if you were selling bonds or treasuries, with above 3% yield, you got to love selling them with a 280 yield. So I think at this point right now, you've seen leverage funds add to those shorts right now based on the fact that they know where they're wrong. And that's going to probably either be a settlement below 275 or somewhere in that technical level, maybe 260, high 260s, mid 260s, where they're going to have to call in and start buying them back. But ultimately right now, this is a level where they can really kind of mark risk very closely. And I think that's why we're seeing some more selling here out of the leverage fund community, looking for a relief pullback in yields, maybe that take your foot off the gas pedal flight to quality bid that we've seen in treasuries. So right now, as we head into the holiday weeks, treasuries on the highs, yields on the lows, volatility very high. A lot of that can change, but it may take a little time.